Has the dollar's period as the leading global currency come to an end? On August 5th, the U.S. stock market fell by a whopping $2 trillion, causing enormous losses for investors worldwide. This sharp decline has caused many people to reevaluate their dollar investments. The dollar appears to be headed for a drop in 2024, with many experts expecting a recession. Adding to the uncertainties, the BRICS countries are actively attempting to threaten the dollar's dominant position in global trade. With these developments developing, the pressing question is whether the dollar can survive these challenges or if we are witnessing the start of its decline. Let us find out. August 5th, 2024 was a very volatile day in the U.S. stock market. Within the first hour of trade, almost $2 trillion in market value was lost, leaving investors and analysts around the world perplexed and concerned as they sought to comprehend the origins and ramifications of this rapid fall. The severity of this crisis, combined with economic trends, has created a perfect storm of financial instability. This news comes amid BRICS' efforts to de-dollarize the economy, indicating that bad luck has struck the dollar. The unexpected and devastating crash of the U.S. stock market on August 5, 2024, raises the question of what caused this unprecedented event. The immediate cause can be traced back to growing concerns about a potential economic slowdown in the United States. This anxiety was heightened by poor job data released just days before, which revealed that the United States economy was not creating jobs at the projected pace. Coupled with the Federal Reserve's decision to keep interest rates at a 23-year high, market confidence was severely damaged. High interest rates have proven to be a two-edged sword for the American economy. While they are meant to combat inflation, they have increased borrowing costs for both firms and individuals. This has resulted in lower spending and investment, further restricting economic growth. As fears of a recession intensified, panic swept through global markets, resulting in major stock sell-offs. The effects were immediate and far-reaching. The Dow Jones Industrial Average began down more than 1,000 points, while the S&P 500 and NASDAQ Composite sank 4.25% and 6% respectively. The sheer volume of trades resulted in automatic halts in trading, but these steps did little to slow the flow of selling. Moving aside from the immediate causes, it is critical to understand how domestic economic concerns translated into a worldwide market reaction. Because today's financial systems are so intertwined, a dramatic occurrence in one large economy can have far-reaching consequences worldwide. The effects of the U.S. stock market crisis reverberated around the world, underscoring the interconnectedness of modern financial institutions. Japan's stock market was among the most affected, with the Nikkei 225 index plunging to its lowest level since 1987, when it plummeted 3,836 points in one day. The severity of the crash demonstrated the vulnerability of global markets to shocks emanating from the U.S. economy. Similarly, Taiwan's stock market suffered its worst drop since 1967, fueled by concerns about a possible recession in the United States. Taiwan's economy is heavily reliant on the U.S. market for exports and economic growth, thus any downturn in the U.S. could have serious consequences. The panic among investors triggered a major sell-off, wiping off significant market value in hours. The global sell-off wasn't limited to Japan and Taiwan. European and Asian markets also saw strong falls. The FTSE 100 in London lost 7%, while the DX in Germany fell 8%. In Asia, the Hang Seng Index in Hong Kong and the Shanghai Composite Index in China both fell significantly. This widespread worry can be due to the perception of the United States as a leading indicator of global economic health. When the U.S. economy shows indications of difficulty, there are concerns about global economic stability. Investors fearing a broader economic collapse prefer to withdraw their investments from riskier assets, resulting in widespread market falls. Moving forward from the immediate global impact, it is critical to investigate the fundamental causes that have put the U.S. dollar under strain during this crisis. The The U.S. dollar, long seen as a pillar of global economic stability, is now under intensive scrutiny due to the combined pressures of the stock market meltdown and the BRICS countries' continued efforts to lessen their reliance on the USD. The BRICS group has been calling for a change away from the dollar-dominated financial system, a position that has gained traction in light of the current U.S. economic woes. The current crisis has raised fears about the dollar's stability. As the United States grapples with an economic recession and high interest rates, the dollar's value has been questioned. The BRICS countries have grasped the opportunity to advocate for alternative financial systems. Their de-dollarization measures include boosting the use of local currencies in commerce, developing new payment systems, and forming a BRICS currency to minimize reliance on the U.S. dollar. China, in particular, has led this effort. With its strong economy and expanding prominence, China has promoted the use of the yuan in international trade. The recent stock market meltdown in the United States has strengthened China's position that the world should not be unduly reliant on a single currency, particularly one linked to an economy suffering serious issues. So how are the BRICS countries impacting the future of global finance? Here's a reminder to like, and subscribe to our channel for more videos on Africa's geopolitics, economy, and changing terrain. Let us proceed now. The BRICS countries are rapidly influencing the future of global banking by challenging the conventional dominance of Western-led financial institutions. Through efforts like the New Development Bank and the Contingent Reserve Arrangement, BRICS offers alternatives to the World Bank and the IMF to reduce reliance on Western financial systems. The group is also advocating for currency diversification, including the use of local currencies in commerce to lessen reliance on the U.S. dollar and promote a more multipolar currency system. Furthermore, the BRICS countries are increasing their influence in global commerce by establishing networks that have the potential to change trade patterns and threaten Western financial hegemony. They are developing alternative payment mechanisms to circumvent Western-dominated institutions, and they are considering extending their membership to boost their geopolitical and economic influence. Overall, BRICS is working to create a more balanced global order that reflects the economic realities of the 21st century, gradually altering the global financial architecture. Finally, the U.S. stock market meltdown on August 5, 2024, exposed serious economic issues and global implications. With approximately $2 trillion wiped out in the first hour of trade, the event shows the U.S. economy's potential weaknesses as well as the stability of the dollar. The crisis has had a major influence on global markets, with countries such as Japan and Taiwan suffering significant losses. The BRICS nations' continued efforts to lessen reliance on the dollar and promote alternative financial systems have worsened the pressures on the U.S. dollar. The current crisis may hasten the transition to these alternatives as more countries contemplate diversifying their currency reserves and implementing new payment systems. The Federal Reserve's response, which is expected to include interest rate reduction, may come too late to prevent a deeper recession. The broader geopolitical and economic concerns, such as trade tensions and conflicts, exacerbate the situation. Is the dollar officially on the decline? The subject of whether the dollar is officially in decline has gained traction, especially in light of recent economic developments. Yes, the dollar is officially dropping, and this tendency existed before the latest stock market downturn. The dollar's drop was most pronounced in July 2024. When it plummeted against several major world currencies. The DXY index, which measures the dollar's strength against a basket of currencies, fell 1.7% during that month. Specifically, the dollar fell from 717 to 820 versus the euro, and from 160.84 to 150.46 against the Japanese yen. These fluctuations reflect a decline in the dollar's purchasing power in the worldwide marketplace. This drop is taking place despite the U.S. economy exhibiting signs of resiliency during 2023. However, several reasons are contributing to the dollar's declining position. One of the important difficulties is the United States' negative savings rate, which has been a growing source of concern because it shows that consumers are increasingly depending on credit and draining their savings to maintain their spending habits. Additionally, there are clear signals that the U.S. economy is slowing. This expected economic slowdown is being driven by several causes, including tighter monetary policies imposed by the Federal Reserve to combat inflation, as well as external pressures such as geopolitical tensions and changes in global trade patterns. These reasons, together with the dollar's diminishing value, indicate that a recession in 2024 is increasingly inevitable. Do you believe that at this time, the BRICS will find new tactics to fight the dollar? Will they effectively establish their money as the new world currency? Let us know in the comments if the dollar should be changed. Would you like to see more videos like this one? If so, please subscribe to our channel and press the bell icon next to it.